Welcome to Investors Guide and thank you for joining in. Remember, this is a show in that retail investors will help you find the perfect investment product in the market by looking at what suits your needs best. Before we go on to this week's show, I want to tell you about next week. We're doing a special for Independence Day, which is called Freedom to Follow Your Dreams. What we'll do is help you make a financial plan to achieve that dream, whether that dream is traveling, whether it's seeing the world, or if it's just quitting your job and starting your own company. Send us your questions on the email ID that's flashing on your screen right now, and we'll make a plan for you with our guests in the studio and help you achieve your dream. On to this week, over the next half hour, we'll first take a look at our income growth portfolio designed for a 65-year-old. We'll help you make the best possible returns in this market. We'll help a 63-year-old homemaker rejig her portfolio and find the best options for her as well. And in our product review, we look at the HDFC Premier Multi-Cap Fund to tell you if you should stay invested. Time for me to bring in Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert who joins us on this show every week. Dhirendra, it's always a pleasure to have you on Investors Guide. Thank you so much for joining us. We have, over the last few weeks, been discussing our portfolios that we designed specifically for various age groups. So we talked about all of the other age groups. This is our last portfolio that we're revisiting. It's called the Income Growth Portfolio. This was designed for someone who's already retired, keeping in mind the fact that they've already made use of the Senior Citizen Savings Scheme that allows you to invest up to 15 lakh rupees. Over and above that, this is a portfolio that will help you beat inflation as well as give you regular returns. Our income growth portfolio invests in the FT India Dynamic P ratio fund of funds, the HDFC MIP Long Term, the Reliance MIP and the UTI Balanced Fund. Dhirendra, you'll be happy to know that this portfolio has given us 9.6% returns annualized over the last 3 years since we started hypothetically investing in it. This is very impressive given the market we have seen and the fact that this portfolio does have an equity allocation as well. Are you impressed with it? Would you like to make any changes at this point?
No, in fact, I would not like to make any changes here. And what I find is that the good news is that it has done well. The bad news is that, we have eaten a part of our capital through the difficult times. So maybe, there isn't a substantial appreciation. My intention at the time of, crafting this portfolio was that one should be able to revise upward the periodic withdrawal. So here we are doing a very straightforward thing, investing 10 lakh rupee lump sum and taking out 8% annually. I was thinking that if the accumulation is higher, we can enhance it to 10%. And the way the withdrawal works in this portfolio is that it is not a monthly withdrawal. It is planned as a supplementary income portfolio. Unfortunately, I would not like to enhance or, increase the amount of withdrawal even this year.
All right, so we're not making any changes to our income growth portfolio. It's flashing on your screen. It's meant for someone who's about 60 years old and who wants a regular income from their portfolio. Let's take a few questions, Dhirendra, from what we've received this week. Chandradhar Singh has written in. He tells us he's a surgeon with a monthly income of 70,000 rupees. He will retire in March 2013, which doesn't give him too much time. Now, he's a little disappointed that he hasn't done more with his money through the course of his career. He pays 80,000 rupees on insurance policies. He has some money in fixed deposits. He's invested 40,000 rupees in the Kotak Select Focus Fund, 6 lakhs in the Kotak Bond Deposit, 36 in Kotak Classic Opportunity, and 4 lakhs in the India Build-Out Fund from Milestone India. And he wants to know what he can do now to build a strong portfolio that will give him good returns and what he should do with his existing portfolio. Now, obviously, he will get his PF and gratuity when he retires next year. So let's start him off on something that will assure him a regular income after he retires. What would be your recommendation?
What I find here is that, he's of the impression that Kotak Classic Opportunity Fund and the Milestone Fund is a mutual fund, which it is not. What is registered in his mind is the investment that he has made. But some of these investments may be illiquid now and will remain illiquid for a while, and that will be as per terms, and the value might have depleted, and in some cases substantially. So he should immediately take a stock of everything. My thinking will be that he should be into our conservative portfolio, which is 70% fixed income, 30% equity. Will take care of that.
All right, Dr. Singh, we hope that helps. Senior Citizen Savings Scheme, post office monthly income plans, and over and above that, our conservative portfolio. That should be a solid plan to take you through your retirement. Keep an eye on health insurance. Make sure that after you retire, you still have health insurance that you've bought for yourself and for your wife to cover any eventuality. Write back to us if you need anything else. Let's move on now to our hold or sell segment. Well, Roshni has written in. She's a 63-year-old homemaker. Now, 60% of her portfolio is invested in debt instruments like the Post Office Monthly Income Scheme, bank fixed deposits, and the Senior Citizen Savings Scheme. 40% of her portfolio she's invested in mutual funds. She wants to know if she should hold or sell these mutual funds. Virendra, on first sight, it seems like a long list, so we're going to go through them quickly. The Birla Sun Life Frontline Equity, continue investing?
Yes, continue investing.
The Canara Robeco Equity Tax Saver, assuming the lock-in has expired, would you recommend she holds on to it?
Yeah, I still feel that, this is a good fund worth holding.
The DSP BlackRock Top 100 Equity Fund, this is an impressive fund, but for someone with her horizon, would you recommend she holds on to it?
Yes, I suggest she holds on to it. It's another, given her time frame and given her age, I think having a exposure in large cap is important.
All right, the Franklin India Flexi Cap Fund as well. Now, she seems like someone who has the rest of her bases covered. She did all of the things that you had asked, Senior Citizen Savings Scheme, Post Office MIP. So, for someone like that, would a fund like this complement that portfolio?
No, but now going by the count of these holdings and as you are listing these names, my views are very narrow in the sense that is it a good fund or is it a bad fund? But given her age, given what all she has done already, and given the scale of investment, which is all these investments account for 40% of her money, I would suggest a completely different approach to managing her portfolio, which is getting into our stable growth portfolio, because here she has the income fund, here she has the balance fund, here she has the all multi-cap fund as well as large cap fund. Managing this, managing the taxation of various things, I would suggest that, she pulls out her fixed deposit from the bank in a limited way. Make this investment as 50% of the total allocation. Go for our, stable growth portfolio, which is made up of balanced fund. And it will be far more tax efficient, and she will not have to worry about managing this portfolio.
Roshni, that's a fairly clear plan. Keep the Senior Citizen Savings Scheme and the Post Office MIP. Pull the money out of the fixed deposit and spread it across our stable growth portfolio that's flashing on your screen right now. It should give you enough of a coverage to make your portfolio complete. Remember, you can write back to us if you need any more help with your investments. Coming up after the break, Virendra is going to stay with us and we'll look at the HDFC Premier Multi-Cap Fund. We'll tell you if you should stay invested in this fund.